Art Collins here. I've done several tutorials on day trading, and if you've followed them, you know that one of my preferred techniques is to get in trades early as opposed to late. But also, if you know something about me, you know that I'm never going to look away from a bias that I uncover. A later trade, a system for a later trade, mechanical, that doesn't allow any judgment and is robust and reliable, that occurs later in the day. That could be a potential uh, tool for diversifying your trading techniques. So I'm going to show you a pretty nifty approach entering at 2 o'clock Central Time. It's like the last hour and 15 minutes in the futures markets. So those of you that are interested in how trading ideas are formulated, a lot of them come from just looking at a market condition, such as a runaway trend day, and then just trying to formulate rules around what are characteristics of a day like that. All right, you're looking at a pretty good up day here, occurred recently. If you were to look to be a buyer at 2 o'clock, to enter at 39 and a quarter, and then let's say hold the trade until the close, 43 and 3/4, you would have picked up $200 a contract. What would make you think that this would be a good time to buy way up here? Well, kind of looks to me like a trend day is a day, if you convert it into time snapshots, the further you go in the day, the higher the price for a long side play. One way to attack that might be to say if at 2 o'clock the price is higher than it was at blank o'clock, and blank o'clock was also higher than some time frame before that, that might be a decent setup. Okay? Yes, simple idea. That's basically my MO, as you know, if you follow me. Here's the resulting rules. Now, understand that there's all kinds of different time frames that might have worked. I optimized, and this is pretty much the best result I found. You set your chart to 5-minute bars, day session only, 8:30 a.m. until 3:15 p.m. Central Time. If at 2 o'clock Central the close is higher than the 1 o'clock close, and the 1 o'clock close was higher than the 10 o'clock close, go long. And everything's vice versa if you're going to go short. 2 o'clock close lower than 1 o'clock, 1 o'clock lower than 10 o'clock. Okay, in this demonstration, we're not having any stops. We hold the trade for 75 minutes, exit on the close. And this is what we wound up with from the beginning of 2010 through the end of 2019. You got reasonably good net profits. Keep in mind, these are only 75-minute long trades. So maybe this is why they might seem less than a lot of what I show you. But your all-important ROA, which is the net profit divided by the worst drawdown, gives you a percent that your account would have increased had you started with that drawdown. Pretty hefty over a 10-year period. 3.5 time gain on your original startup there. Over 500% gain if you would have started 7,000 in the mid cap. So, fairly robust idea. Again, I favor early trades, and they work best for me. But if you want to diversify your approach a little bit, get a later trade on a day that looks like it's trending, might want to consider this. All right, so the 2 o'clock system is a good way to capitalize on trend days. It can add diversification to day trading that emphasizes early trades. Has a robustness across all 5 major U.S. stock-related futures markets, and the net profits are impressive considering the trades are only held for 75 minutes. This is coming out very shortly. Keep your eyes open. And thanks for joining me.